Hey everyone, welcome back to Corporate Decoder. Today, we're diving into a Form 8K filing from Tyler Technologies. Think of it as a peek behind the curtain where we'll uncover what a top executive is planning with his stock options. Let's see if there are any surprises hidden in the fine print. This report tells us about something that happened on March 6, 2025, but was officially reported a few days later. It involves H. Lynn Moore Jr., the president and CEO of Tyler Technologies, a company that makes software for the public sector like local governments and schools. So what's the big deal? Well, Mr. Moore is planning to sell some of his company's stock. Now, executives selling stock isn't always a red flag, but it's always good to understand why, how, and when they're doing it. After all, when the captain starts quietly leaving the ship, it might be a sign. He's using something called a Rule 10b 5-to-1 trading plan. Think of it as a prearranged agreement to sell shares at a specific time and price. It's a way for insiders, like CEOs, to avoid accusations of trading on inside information. Basically, they set up the plan when they don't have any secret company knowledge, and then the sales happen automatically. Mr. Moore plans to sell up to 42,000 shares of Tyler Technologies stock. That's a significant chunk. These shares will come from stock options he's exercising. Stock options are like a perk. They give employees the right to buy company stock at a set price and hopefully sell it later for a profit if the stock goes up. These particular options came from a grant back in 2018. He still has quite a few left from that grant, 85,000 to be exact, and these options are set to expire in February 2028. So selling some now makes sense to avoid them expiring worthless. Now here's a key detail. The sales won't start until June 10, 2025. This waiting period is important because it adds another layer of protection against insider trading accusations. It shows he's not reacting to any recent, potentially secret information. The reason behind this plan, according to the report, it's part of Mr. Moore's long-term financial planning. That probably includes diversifying his assets, meaning he doesn't want all his eggs in one basket, especially if that basket is Tyler Technologies stock. It's also for tax planning. The company also emphasizes that the plan follows Tyler's own rules about insider trading. They're making it clear they've dotted their I's and crossed their T's to avoid any legal problems. The filing further explains how Rule 10b 5-to-1 works, saying it lets people who genuinely believe they don't have any secret information set up these trading plans. Even if they later do get inside information, the prearranged trades can still go through. That's the whole point. The plan is structured so that the brokerage firm might sell around 50 shares each month for 8 months. These sales will happen around the 10th of each month, starting in June 2025 and going until January 2026. The plan itself ends in February 2026. The brokerage firm will use a special computer program to sell the shares. It's called a volume-weighted average price algorithm. In simple terms, this means the shares will be sold gradually over the day, trying to get an average price based on how much trading is happening. This helps to not flood the market at one time and drive down the price. Now here's a very important detail. There's a minimum price. The brokerage firm cannot sell the shares for less than $575 each. If the price dips below that, the shares won't be sold that month and the order will carry over to the next month, when another 5250 shares could potentially be added. If the price stays too low, some shares may not be sold when the plan terminates. Any actual sales that happen under this plan will be reported to the Securities and Exchange Commission. Mr. Moore will file something called a Form 4 each time he sells shares. This makes the transactions transparent to the public. You could even look them up yourself to see how things are going. Even with these planned sales, Mr. Moore still has to follow Tyler's stock ownership guidelines. These rules require him to hold a certain amount of company stock based on his salary. The report says that after each monthly sale, he'll still meet those requirements. The very last thing in this filing is a digital exhibit which has no value to a normal person. So what's the takeaway here? Mr. Moore, the CEO of Tyler Technologies, is planning to sell some of his stock options through a prearranged plan. This plan is designed to avoid insider trading concerns, and it seems to be part of his long-term financial strategy. He is being transparent with the sales by pre-committing to them, filling out the trading plan and doing it in advance, and reporting them to the SEC afterwards as well. Let's step back and look at Tyler Technologies overall. They operate in a pretty specific niche, providing software to government and education organizations. These kinds of customers tend to be fairly stable. Governments and schools aren't usually known to quickly change software vendors, making it hard to get them to switch once you lock them in. This stability is a big strength for Tyler Technologies. It means predictable revenue and long-term relationships. The downside, government and education markets can be slow to adopt new technologies that could limit Tyler's growth potential if they are slow to innovate. If you can't sell more to your customers, the main way to grow is to keep stealing more customers from your competitors. One thing to watch is how well Tyler integrates new acquisitions. They've grown partly by buying other companies, so it's important that they can successfully merge those businesses and technologies without losing customers in the process. In conclusion, Tyler Technologies seems like a solid company in a stable market. The CEO's stock sale appears to be a routine financial planning move, not a sign of deeper problems. However, investors should keep an eye on their innovation and acquisition strategies to ensure long-term growth. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more corporate deep dives.